Yeah. All right. Good morning. All right. Well, anyways, anywho. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange. Hang on, I left my water. Where's my water? Water. Hello, water. What are you doing? What are you thinking? All right, good morning. That's so much better. So we gathered here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. That being said, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money cannot afford to lose. My name is Wayne. Welcome to my office. This is it's 8 o'clock in the morning, New York time, so we're about 90 minutes away from the stock market open on Wall Street. Today at 10 or 10:30, Jay Powell speaks at his annual Senate testimony, and then tomorrow his congressional testimony, which is just a repeat. So that's going to be the huge market mover today. So be prepared for that. Okay? Even though he will not change anything in what he says, the market will likely change their opinion. So anyways, it could be interesting. I'm thinking dollar strength. How about you? So anywho, we will, let's burn through some charts today. Let's keep the fundies for another day. Let's just do charts. I suggest we do gold, oil, Bitcoin, US stock market. Maybe we can take a look at yields. But really, whatever you want. Dollar pairs, cross pairs if you want. All that kind of stuff, you just let me know. In the description below the video, there are 3 links that I want to highlight. One to my book, Strategic and Tactical Forex Trading. Okay. It's old as dirt, but the information is still relevant. If you could leave a review, that would be wonderful. I'd appreciate that. 2, there's a link to FX Bootcamp, a community that I've been leading for 20 years. It's legit. Almost everybody in this chat is a member of FX Bootcamp, so if that should speak volumes. So why don't you check it out? It's very, very affordable, and I swear to you, there's a 10-to-1 value to cost. It's the $88. You're getting at least $1,000 course. 88 hours. I mean, but it's good. Honestly, I'm proud of it. It's good. Honestly, it's good. And then lastly, a link to tradersway.com. You need a foreign exchange broker to be a foreign exchange trader, and that's what they do. Over the years, I've worked with maybe 3 brokers, and I've been with Traders Way for 8 years. Yeah, they've earned my loyalty and respect. Check them out. Maybe you'll like them too. You don't have to tell them that I sent you. You don't have to click a tracking link. You don't have to put in a coupon code, all that kind of stuff. Don't worry about it. Just go and check it out. Huh? What do you think of that one? Don't be cool, right? I got this cup in Atlanta hanging out with one of the Jonas Brothers. Anywho, oh, Richard bought the book. It's on its way. Right on, man. I hope you like it. One of the reviewers said it was the worst book ever written. I'm like, well, I've never been accused of being a professional writer. All right, so anywho, let's take a look at the stock markets around the world. Here's these predicted pullbacks, okay? And now I'm waiting like a sniper in a ghillie suit, waiting to take a shot. Okay? Enemies in the AO, but I'm hiding. I'm incognito. I'm invisible. So I'm waiting. This is not a good, it's a good price to consider selling. It's not a good time to consider selling. So on the right-hand side of this chart is price. On the bottom is time. So I'm in an okay price, but not a good time. So I wait. But at least you can think or see what I'm thinking. And so maybe maybe today because of the testimony. Maybe not so much on the ASX, but as a bear, I want to sell high. I don't want to sell low. So I needed it to go up. I labeled it as a buy zone. It's not like I'm surprised. It's nice to be able to label these things like actually weeks in advance. Okay, so anywho, you should get a sense of where we are. Taking a look at, let's do DAX before. Let's do DAXy. And DAX is up. And if it's up, then it's stuck. And a little too high for moi. I anticipated a break to the downside, even though it's clearly an uptrend. I wasn't so sure that we'd be able to maintain that. And then last week was a huge rally off the 200. So we're back to the very top of the range. So once again, wait is basically what I'm thinking. Wait. Okay, now take a look at FTSE. It's a lot less ambitious than some of the other pairs. Or pairs, I should say, markets. So, wait. I don't know, but wait. Okay. So anyways, rangy to up, but I don't think up, so I wait. Remember, I'm a bear. Okay? So I just got to wait. That's all. Here's our NASI. And it's, you know, doing somewhat what I would expect. Quiet yesterday because of the big news today. So, am I anticipating a lower high? Well, that's kind of what I had a week ago. But yeah, Yeah. Oops. Yeah, it would be great if we got something like this today off the news, and then I could get back into the game of selling lower highs. Right, Gary? And now the S&P. Where's my S&P? Where does she go? There we go. There we go. So I guess not here, but on another chart somewhere. Maybe it was here and I deleted it. I don't know why. We had two scenarios. We had an OOP to CT. And if you don't know what that means, then you should take the training course. But we knew the decision was going to happen here. Or we were going to head up here and come down. They hit the same price. One is early in the month, one is late in the month. So it looks like plan B is the one that's going to be in play. So that's the strategy now. Now you know what the strategy is. Okay? The generals came in and said, "Gentlemen, gather around the map table. Here's the strategy." "Sir, yes, sir!" Okay, anywho. So that's that. I have the right price to consider selling. I don't think it's the right time to sell. I probably need the Senate testimony to be the catalyst. Morning, Maida. Morning, Frankie. Morning, Gary. Good morning, Adam. Okay, so I'm ready, willing, and able, just not now. But what I anticipate by the end of the day would be, I think it'll do something like this, and then tomorrow, I hope not. I hope it's just down. How to tweak an indicator for day trading. It's a time issue, not an indicator issue. Let me show you how to go to a day trading setup. How about this? There it is. How about a swing trading? Oh, there it is. How about a position trading? There it is. I don't need to change indicators. The issue is time. Remember, your indicators are nearly worthless. I use them because they show me very specific things, but they're different uses to understand price action, but it's just price action. You have to understand why people are making their decisions. So playing around with moving averages or other indicators, tweaking this and tweaking that and tweaking this and tweaking that, I think is honestly a fool's errand. When I first started trading, my first few years, I used the 20 and 60 EMAs. And when I was reading about Fibonacci and the golden ratio and the sequence, and I'm like, oh my God, 2155, that's very close to 2060. I wonder if that's why my moving averages work. And so I changed from the, what we have today, 2155, just because they're Fibonacci numbers, but it doesn't matter at all. It's ridiculous. So here's as far as, things like moving averages are important. Here's how simple it is. You want to have a medium term study and a short-term study. Now, I use combinations of moving averages. So my medium term is 21 and 55, and it's really the space between them that matters. I explain it a little bit differently in the book, but you got to get that concept. But when you think it's, it's really just sort of, you need a medium-term pullback. That's all it is. So you have to have a measure of some sort of medium term. And then you need a trigger. When do you buy? When do you sell? Oh, that's why I use the 5A cross. And then you can take profit here on the 5A cross. Great, sweet, nice, beaut. So you have short-term and long-term. Which moving averages? It doesn't matter. But what you don't want to do, right, as Richard is asking, is like, do you tweak the indicator to get the different type of trading strategy? And that's where I say, whoa. No. What we do is based on human activity, and I want you to understand that and not focus on tweaking the indicators. You'll never get consistent results. You're basically backfitting and all this kind of stuff. It's just not even the right question. I mean, and I'm thanking you for that, Richard, for bringing it up. I'm not trying to belittle you. Absolutely not. But really, no. So I want you to focus on two things for the next really couple of years, Richard. Price action and pivot points. They're leading indicators. After you get that down, spend a couple of years learning things like fundamental analysis and seasonality. Those are 4 leading indicators. And by the way, this is a reference to Tarantino. Right? If you know what that is. Tarantino. Inglorious Bastards. But yeah, you don't need the indicator. I like pivot points because they're measuring the sort of a probability of a top and bottom in that time frame. That's it. Cool. And they're leading. So I already know the top and bottom of this market, most likely the probable top or bottom of the market for the month of March. Now, I don't know if it's going to go down or up, but isn't that my job? Well, what if I tweak the indicator? No, it's just an algorithm. And it's measuring sort of like, let's say, variance if you want it, or it's kind of like standard deviation, and you're measuring this period of, 21 trading days or whatever, like it's just an algorithm. And it's giving you some idea. Now, one of the things I like about it is the weighted average, the weighted mean, incorporates a bit of sentiment in it. But nonetheless, it's a leading indicator. So I can tell you, based on statistical analysis of the market, if this is bullish, we'll probably get here, and then bulls will want to take profit. If this is bearish, bears will take it down here, and at those prices, we'll want to take profit. Now, I can also tell you, and I already did, so I'm repeating myself from last week and even the week before, bulls are thinking this, bears are thinking that. And can you see my issue with, I know what I want to do, I'm at the right price, but it's not the right time? Because statistically, it's sort of like 50-50 whether it goes up or down, and those odds are not good for me. I think I can reduce my risk, okay, and wait a little bit. And then maybe today with the catalyst being testimony, maybe we get some price action like that, and then I engage the enemy when I feel other people are with me. I have reinforcement, so to speak. Well, Darko, it's a good question. I don't know how to give you the odds, right? What are the chances USD becomes weak today? I don't know how to specifically answer that, but I think, what would Jerome Powell say to create USD weakness? Can I give you an answer for that? I can tell you what to listen for. Okay? If Jerome Powell mentions the word disinflation, look for the dollar to weaken and the stock market to rally. Going back to David's questions or responses, he says you use a 5-day moving average, but you use it on the hourly chart, so it's 120 EMA. Good, that's smart. So I'm just using a 5 EMA, but on the hourly, convert it and use it. But see, it sounds to me like you're trading the indicator, but you're not trading reality. Now, it's fine. Yeah, it's fine. That's a good start. I'm not against that, but it feels very mechanical. Okay. Right. So there's just, it's okay, but it's not big enough. Like I want you to know why. Not just trading it, right? On says, why are COT data so far behind? Well, they're only updated once a week on. You think about institutional investors on. For example, let's say you're long Bitcoin. You're a hedge fund or corporation or something, and you're holding Bitcoin and your, what do they call it, cost basis is $40,000 and it's only $25,000 in the market right now. You're probably hedging it like crazy somewhere. Where should we watch the testimony? I was thinking about sitting by the pool with my laptop and smoking a cigar. I had a long day yesterday. Oh, and for those in my day trading group, I apologize. It was a long day. I was in a meeting, just big money, let's just say. Big money, no whammies. And, two things. A, I was in the meeting. B, I couldn't get out of it. And C, I didn't even know what time. It's not that I forgot. I wasn't even aware what time it was. And then, so I apologize. But it was one of these days where I'm taking phone calls in the car as I'm driving places and, it was just a crazy day where I think I was on the phone for more than 8 hours yesterday or Zoom calls or whatever. Just crazy, right? So I lost track of the universe. So yeah, maybe with today we can, would you guys be interested, FX boot campers? If I did open the live room to everyone, even video members, video membership only. We just kind of sit. I don't know if I want to say anything, but we'll listen to it in the live room and just kind of hang. Yeah. Kind of like an off the charts. Yeah. Yeah, I guess so. I'll get a wireless mic. I have 9 wireless mics that are all very expensive and none of them are charged. Have you ever done that? Yeah. Will it be? Well, I assume so. I don't know. I have Bloomberg and CNBC and a bunch of other things that I can bring up on my laptop. My laptop's cool because I can live stream one of my screens. So just out of the box, my laptop has 2 monitors, literally. Physically 2 monitors, one on the keyboard side and one on the up side, which is kind of interesting. So I can set that up. But I've also got a setup where, and you probably have seen it on FX Bootcamp. I can show it to you. It's kind of cool. You know, traders like this stuff. But I sometimes use it, my laptop, with 4 screens. 4. I know it sounds stupid, but I have a picture on YouTube actually. You guys might like this. So I'm just tired, man. It was a long day. Long day, baby. Oh yeah, what do you think of my new quad screen laptop? So I guess you'll have to vote. I don't think I can see, if I click this, it's a vote, isn't it? I'm just trying to get this bigger. Oh yeah, let me zoom in here. What do you think of that? You see? Where's my drawing tool? So screen number 1, screen number 2, screen number 3, and screen number 4. Isn't that cool? I know, right? Now, notice all screens are running and nothing's plugged in. The laptop, these cords are for the monitors, okay? But nothing's plugged in. It's all running off the laptop battery. I can pick that up and go to the pool. Okay? Neat, right? Anywho, you know, we're traders. I think we all like this stuff. It's fun, right? So maybe vote. I'll give you the link. Maybe vote. Oh yeah, this might be a better angle. See? It's wild, huh? And I'll show you. Like that's actually, you can see 1. I don't know. Well, anyways, you can see that it's like they're physical monitors, right? It's neat. I don't know. It's neat. It's quite literally 4 screens. No, Jim Rogers is not the doom and gloom guy. Jim Rogers is one of the, happiest, nicest people you'll meet. Yeah. Yeah, right before Christmas, he sent me 2 of his DVDs. I get a package from Singapore. I'm like, what the heck is this? Right? And I open it up, and it was Jim Rogers sent me his DVDs. I'm like, awesome. So I watched them. They're so good. I don't consider him a doom and gloom guy. No, I just consider him a commodities guy, Richard. I think you're thinking of somebody else. Good question, David, about, let me see if I follow this. Good question, David, about day traders as I follow up. Wayne, is there a direction decided on the daily more important than the direction decided on the 4-hour, 1 hour? Yeah, well, first Monday, join FX Bootcamp, take the day trading course. That'd be my first thought, because it's pretty detailed on how to do it. Hang on. Let's see if I log into Bootcamp. Hang on. Is that not out? Oh, what? All right, and I gotta update that. So when you log into Bootcamp, let me just pop this open. Okay, you go to the video training courses. You go to day trading. Okay, so there, it's probably close to 6 hours, I think. Certainly 4. Let's see. No, I guess this is an hour. Part 1. Part 2 is an hour. Part 3 is an hour. Part 4 is almost an hour. Okay, so it's 3 hours, 45 minutes. Oh, David passed the first exam for the CFA, level 1. Tell us about it. What was covered, man? Sarav says, you actually know Jim Rogers? Well, he sent me. Well, look, are we buddies? No. But have I communicated with him directly? Yes. Have I communicated directly with the staff? Yes. Do I have a relationship with George Soros, who Jim Rogers worked with when they founded the Quantum Fund together? Well, yes. So, but are we friends? Has he invited me over for dinner? No. I think it's weird though. Yeah. 6 degrees of separation, right? Connected to both Soros and Jim Rogers is amazing. Like, if you know my origin story, I shared it somewhere and I don't even remember where, but I show you where I started. There's a spot in the universe where I stood one day. Nearly the middle of nowhere. So I'm standing in the middle of nowhere in the universe, and I decide I'm going to do something amazing. There was like one moment in space-time where I know where I stood, I know what, right? All that kind of stuff. And in a very short order, you wouldn't believe how much was accomplished and how impossible the whole thing was. My journey, totally impossible. And one of those things was working with, on a board of directors with George Soros from the Quantum Fund, the guy that broke the Bank of England. So I'm standing in the middle of absolute nowhere in space-time on our universe, on our planet. And 5 years later, yeah, just, so like never cut yourself short or dream too little. Whether it's luck and drive, and usually a bit of both or a lot of both, you can accomplish more than you can possibly even dream. The world has taught me that the impossible happens all the time. Richard, you're talking about who? Jim Rogers, still a mean reversion trader? No, I think he's just straight up a commodities trader who looks at the market in terms of years, not in minutes. But I don't, George Soros is more of a reflexive trader who believes the market can be out of position for a very long time and then snap back to reality. Is that a mean reversion? It is, but it is a different concept. Monday said, did I pick up anything for my time around Soros and the other directors? Well, you have to put it in context. I believe I was 20 because I remember not being able to drink alcohol. I'm running a company of 3,000 people with offices in 27 cities around the United States. I'm managing a team and a region, and I'm sitting on the board of directors and have a seat in the finance subcommittee. And I'm 20. So just all of it, every moment was, picking up stuff. Just even being in a law firm office, because the law firm would host the meetings, just being in a boardroom, going up an elevator, going through revolving doors in a skyscraper. Even taking the subway to the meeting was a learning experience for me. Seeing how the chairman of the board was so regal. He was a partner at Arthur Andersen. I remember he just looked rich and powerful and sophisticated, you know. Members of, like, it was interesting, like the senior executives from General Electric, you know, like, wow. One time someone came in with a briefcase basically handcuffed to his arm. I'm like, who's that? And he's like, oh, he's from the United Nations. I'm like, what? So anyway, so, you know, did George Soros put his arm around me and say, son, you know, I got one word for you, Forex, you know, you should come work for me at the Quantum Fund. No, none of that happened. But I was a child, right? So yes, I learned so much. You know, I mean, it was cool to be with such powerful people. I remember one time after the board meeting, I had to get back up north, way up to Chelsea or something. And one of the people there, his ride was in with, you know, I forget how it all went down, but he had an FBI car. He's like, oh, well, just come with us. I'll give you a ride uptown. And it's, you know, Friday at 5 o'clock. You can't go uptown. Oh, yeah. No. Whoop, 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 whoop. And off we go. And we head north, right? So anyways, so I don't know. It was interesting. But significantly more than I could have dreamt when I started that process of getting out of a tiny little town in rural Canada in the absolute middle of nowhere. I couldn't have dreamt that big. Anyways, I don't know how we got there. All right, cool. So look, I'm in my sell zone. Later today is probably the answer. Later today, once we get a little catalyst from Jay Powell. Let's do commodities next. Oh yeah, if you like any of almost all the templates that you see me use every day, they're just, you download them as part of your membership at FX Bootcamp. Okay. Oh, I see. Yeah, what file? Yeah, it's a template. Yeah, Confluence, yeah. Monday says, is there a mindset difference from them and regular people? That's an interesting question. Well, to answer differently, like those guys, you know, the greatest experience that I had, I think, out of that whole situation is I was working with people at the top echelon, if you will, of the corporate world. And I had learned at 20 that that's not what I want to do. So I avoided the mistake of working for a corporation for 30 years, 40 years, and getting my way to the top and finding out it's not that great. I learned that at 20. So, you know, they were good people, but they're corporate. And I'm an entrepreneur. So I think the biggest thing is a lot of those corporate people are groomed. Like they went to Harvard when they were 20, not when they were 40. Okay? So they're groomed for these positions, silver spoon in hand, waving the red, white, and blue. Right? But that ain't me. I ain't no fortunate son. So anywho, I did the reverse. So I'm like, well, shoot, I know how to run a company, so I might as well go find a company to run. And that's what I ended up doing. So that's cool. So I came back around, and entrepreneurs do think differently. So to answer it that way, entrepreneurs do think differently. I think, and the wealthiest people also think differently Monday, where, when you grow up an average person, upper middle class, lower middle class, lower class, I guess the narrative you get is that if you just work hard, you will succeed. You will be rewarded for working hard. Upper class America is not taught that lesson. And it's really interesting. That's not a lesson for a very wealthy person. Money that has lineage behind it. Working hard is sort of a poverty message, which is kind of interesting, right? Like, getting in the deal. Like, how about this? Just say it differently. How do you make $10 million a year? Working hard? No. By being on the deal, by knowing people, by not even being smart, really. There's just some whole different world. But if you get a good education, work really hard at your company, you're not going to make $10 million a year. Okay? So it's really a different message. It's, it may be something that you're groomed for and you learn and, I don't know. It's different. It's a different message. It really is a different message. And so that's why it's so hard for nouveau rich or for those that are trying to work with wealthy people. There's a thought process that's quite different. So if you're going from, starting your own Forex fund and then you go out and work with wealthy people, very often there's a disconnect. There's a difference in mindset. Okay? You're not rewarded for your time, for example. Okay? So Richard's, working his way up the ladder. What you'll find, Richard, is there will be a difference between the mindset of, let's say the lower 25%, whatever that, and I don't mean that in any negative way. We're just saying, like, let's say income levels or something, right? There's a big mindset change from there to, let's say, probably middle class. There, you're not rich by any means, but you're good enough, and that's your place. And then you got to break out of that and sort of go to upper middle class where, hey, if you get a good education and you work hard, you'll get a good job, you'll get a nice house in a good school district, and that's good enough. And then you'll get the other, now you're working your way up, getting closer to the top 25, where you're going to live in a big house and you're going to fly first class, right? And then you get old, right? So now you have a good education, you have a good career, and you're going to be an executive and all that kind of stuff. But then you get to that top 1%, and once again, it's a shattering of mindset. So there's all these different mindsets, right? Where they shift from get what's yours to that's good enough to you can do better. And then this idea, like, do you remember the scene in Wall Street where he says, I'm not talking $300,000 a year flying first class rich. I mean, rich enough to own your own jet, that kind of stuff, right? That's the difference where the Bud Fox versus Gordon Gekko, that concept, like, how do you think like Gordon Gekko, where you're not talking about 300,000 a year, you're talking about 300 million a year, and you're like, whoa, how do you make that jump? Right? Where a painting on the wall is worth more than you could possibly make in a career in your entire lifetime. How do you get to that level? And it's, once again, a complete different mindset. So that goes all the way back to Monday. We all have these steps. That's true, Richard. Yeah, you can't do better if you don't know better. That's absolutely true. Well, in the swing trading group last week, I taught everybody how to turn $10 a day into millions of dollars. And I think you could do better than that. Okay? That's assuming 10% return a year in your Forex trading, for example, if that's what you're going to do. Okay? Now, my example was 10% because A, the math is easier, but B, you could likely get that on the long run if you invested into the stock market, and ideally if you built a smarter portfolio than just the S&P 500. But the S&P 500 is somewhere between 8 and 10, so you could say 9. So the math will still work out, where if all you did was put $10 a day into the S&P 500, okay, with that on average long-term return, then the rest is just time. How long do you do it? And if the answer is 28 years, you will have millions and millions and millions, not just like 1 million. I don't even know what the number would be, but more than 2. And you have to start. If you're about 30 and you did $10 a day every day until retirement, you will, just on those $10, which is a latte and a muffin. If you gave up your daily latte and muffin, or how about this? If every day you have a latte and a muffin at the coffee shop, it's costing you probably $2.5 million. That's the cost of your coffee and your muffin. Okay, so going back to Thomas's question, is it possible to grow $10,000 into $1 million? Well, so your starting point, your assets under management is 10,000, compounding at a particular rate of return, average rate of return, over time. Simple math. So what's your rate of return? How much are you going to average every year? By the way, Richard just passed. Was it Richard that just passed the CFA one? We can have Richard do this for you. What's the rate of return, Thomas? How much what do you want to base your average annual return to be? What percentage? Or how about this? What's your monthly return? Average monthly return. You can give me annual or monthly. You tell me. Annual is better. Hello? 5% a month or a year? Well, let's try to guess. If you're doing 1% a month, so we'll do this per month, okay, then yearly, I'm going to guess, is about 14%. Okay, so if you're doing 2% a month, it's 29, I think. So you're ridiculously over leveraged, Thomas. You're not going to be able to do that for 28 years. So I refuse. Okay. So if you did 29% last year, okay, the number one hedge fund in the world last year made 31%. They have billions and billions of dollars, staff of hundreds of employees. The research they have is deeper than anybody else. Massive algorithms. Okay. And you're going to quadruple their returns? No. Okay. So Frank says if you do 5% monthly, okay, in a year you'll have $1 million. The thing is, you won't be able to do it. Most likely, you'll end up with zero. That's what I would bet on. Okay? I mean, it's just like the math of a casino. You stay there long enough, you'll end up with zero. You might have $1 million along the way, but you'll end up with zero. So it's just sort of like a fool's errand. You know, you're taking on so much risk that it's just impossible. The best traders in the United States are doing 2% a month. But it's right. But that's a tough gig. That's hard. Can you do 2% a month for 28 years? Once again, that's a bit of a stretch. You're averaging 29% a year. Dude, you're a king. So, right? We're bringing this up as a point. What you want to do is, if you're going to be able to do this for long periods of time, Thomas, you need to lower your risk. So if you're thinking 5, okay, maybe you're doing that now, and that's fine when you don't have a lot of money, but at some point, you're going to have to lower your risk. And I cover this in great detail in my book, where as your account grows, let's say from 10,000 to 20,000, I don't want your lot size to double. And then when it grows from 20 to 40, once again, I don't want your lot size to double. I want it to actually get smaller and smaller as your account gets bigger and bigger, and to the point where you're doing more like the area of 1 or 2% a month. Because that is significant. Can you imagine you're averaging somewhere between 20 and 30%? You're doubling the stock market return over long periods of time. Like, it's when you get big money or bigger money than 10K, that's ridiculous. Your average over long periods of time is double the return of the stock market, and you're not doing it with risk? Holy crap. Okay. So you have to get there, Thomas. That's where I'm getting at. Okay. But if you're doing 1% a month, you're doing 14% a year. And that's pretty close to double, 50% better than the stock market. Okay. What I was suggesting is at 10% a year. Okay. So in that case, right, so it's the rule of 72. Okay. Over 16. Is that how you do it? If you're doing 16% a year, if you're doing it 10% a year, the math is easy, right? Okay. Every 7.2 years, you double your money. What I'm saying is if you're doing 14, I don't have a calculator. I guess I can just do it. So you got to play with your numbers. So if you go 72 divided by 14% a year, which is 1% a month. So basically, where did it go? Okay, so 72 over 14% a year. Okay, every 5 years you double your money. You see that? When you're doing 1% a month, Thomas, 1% a month, every 5 years you double your money. It's amazing. So maybe in your first few years, Thomas, as you grow your account, maybe you can do it for a while and get your 5%. I caution you because you're likely taking it too much risk for the reward. But in the beginning, maybe your thought is, okay, for the first 5 years, you're going to do more. Because what you're telling me is, I guess you'd have to do it. I guess would this work if you did 72 over 5, and I'll tell you how many months. 72 divided by 5. So you're saying, here's what you're telling me now. You're doing 5% a month for long periods of time. Okay. That means every 14 months you're doubling your account. Okay. You could do that. You just don't want to make that your career. The problem is in the beginning, in your first year, Thomas, you suck compared to how good you're going to be 10 years from now. You see what I mean? So in 10 years from now, if you're smart, you're taking less risk. And in the beginning, when your skills are the weakest compared to 10 years from now, you're taking the most risk. So it's like, it's the gamblers or the mindset of, when you got no money to lose, you will risk it all. Now, of course, people with money, they don't want risk because they're already rich. So they're worried about getting poor. So anyway, so there's this idea, right? So anyway, so let's say in the first year, okay, in first 14 months, you turn your 10 into 20. Okay, so you go in period 0, right? You have 10. In period 1, you have 20. How many times do you want to keep taking these risks? Do you want to try again? In year 2, you turn your 20 into 40. Okay. But then at some point you need to slow this down. I don't think you're going to be able to sustain it for that long, but whatever. Okay. You will change your mindset. Your attitude will change as your money gets bigger. Okay. So now let's dumb it down. You're doing 3% a month instead of 5. So you go 72 over 3. And every 2 years now you're doubling your money. So let's say there's year 3 and then year 4, now you have 80. Okay, year 5 and year 6, you have 160. And at this point, you're like, dude, you got to slow this down again. Reduce your risk, Thomas. So now we got to do 72 over 2 equals 36. So 7, 8, 9. On year 9, you have 320,000. Okay. And so year 10, let's just say you have 400K. And I think you should continue kind of getting this down a little bit more so that you're planning on somewhere between 1 and 2, because 2 is huge. You're telling everybody that you're going to make pretty close to 30% a year, even in years when the stock market's down or sideways. The Fed's raising rates, Fed's cutting rates, they're doing quantitative easing, they're doing quantitative tightening. You're like, dude. Okay. Well, that's right, Ahmed. That's why you want to lower the risk, right? So anyway, so now if you do, like, let's average it out. Okay, 72, and you're doing 1.5 a month. Okay, every 4 years you double your money, and that's reasonable. So by year 14, or by year 15, you're approaching your $1 million. Okay, and remember, it's growing more significantly than that. So by the time you get to year 28 and your money's doubling every 4 to 5 years, okay, cool. Okay, cool. Okay. What I was suggesting at $10 a day, if you're around 30, $10 per day, okay, $3,650 a year, doubling every 7 years. Then when you're at retirement age, because you gave up a latte and a muffin, you will have millions and millions of dollars. That was the point I was trying to make. If you invest that money in the stock market, get long-term average returns, okay? But if you're putting it into your trading account and you're doing 1% a month or 1.5% a month. So like I just said, you're every 4 years, you're doubling your money instead of every 7 years. Why? Because you average a 1.5% return per month. And what you should understand is that is glorious. Okay? Okay? Glorious. Hallelujah. You're doubling your money every 4 years. You will not have problems talking to people with money who would like you to do that for them. Okay? No, Bernd, that would all be incorporated into that. 2% is your return, right? You have to account for your costs for sure. And inflation, no, I can't do anything about that. When the number is the number, it's an absolute number, right, Bernd? So if you double your account so many times over a period because of the variable of return that you've chosen, there's a finite number that comes out at the end. 28 years from now, based on what you started with and the average rate of return, there's this number. Now, let's say the number is $3 million. And it doesn't tell you if a car costs $3 million or if a house costs $3 million. You just have 3 million units of dollars. Okay? Now, if you're like, well, you have to beat inflation. Well, that's the bitch about inflation. But if you live in a country where you're doing, 1.5% a month, which I'm guessing is about 20% a year, and inflation is killing all of that, you're in a bad economy. You're like, but Wayne, my inflation is 20% a year. Well, then move. Okay. Monday says, what's the average risk on your return? Well, I don't know what you're doing, so I can't answer that question. Okay. That's your job. You need what I just showed you is as your money increases, I recommend you lower the risk. But what are you doing? I don't know what you're doing to make your 1.5% a month. It could be the dumbest, riskiest thing ever. I don't know. You're supposed to be doing that with as little risk as possible. Ideally, you're just swing trading Forex. Okay? Okay? So what I want you to think about Monday is knowing what I just shared with you, you should calculate what you think your worst month should be. Imagine you had to keep every trade you make for 5 years. And if you talk to somebody, you're required to show them those trades. Imagine that. So you have to now engineer, what are you going to show people? And what people want to see, nobody cares about your winning months. It's assumed. Are you a professional trader? Yes. Okay, you're good. Fine. Now, what investors care about is what happens when you're wrong. What happens when you lose? That's what they want to talk about. Oh, what happened here? I mean, I literally had a conversation about this yesterday with somebody who was looking at a fund. And we were only interested in that fund's bad period. A couple of years ago, they had a drawdown. I think it was 6% or something, right? And we're like, oh, well, that's interesting. Tell us about that, right? I mean, that was the only interesting thing of the analysis. Well, let's talk about that. What happened there? Oh, okay. So we talked about that. Great. So what do you want that number to be? I'd even argue 6 is too much. I mean, that was real, oh, what the hell happened here? So like the answer that I would probably look for is if your goal is 2, what do you want your worst drawdown period to be? 5, 6, 10? Okay, well, you got to then figure out how many trades that takes you to be down 10%. And you're like, well, dude, I'm down 10% 3 times a month. Well, you're not doing it right. Okay. So I would like to hear you tell me, well, Wayne, I would have to lose like 50, maybe 100 trades to lose that kind of money. Well, then I'd say, well, what's the probability that you're going to have 100 trades go bad on you? And you're like, practically zero. Okay, that's what I want to hear. That's what your investors want to hear. And then from that, you have to say, once you lower your leverage that low, do you have what it takes to make 1.5%? And here's the thing, everybody, listen hard. The answer to that is probably no. Almost certainly no. Are you good enough to earn 1.5% if your risk is adjusted appropriately for your skill level? And the answer is no. But that's where you want to start. You have to understand 1.5% a month, 2% a month. You're the best professional trader in the entire United States of America. With more money than you, more research than you, more education than you, more staff than you, more resources than you. And you're going to kick their ass day in and day out? Are you deranged? Right? Like, think about it, right? So you should lower your risk to the point where 1.5 to 2% is a great month. You're like, holy crap. And your trades are worth a lot. Your average trade is triple digits, not 22 pips, right? So that's where you want to get, because you can have 1 or 2 bad months and it ain't no big thing. You can recover from that. But there's the difference in mindset that we all need to go through this in the beginning. We all need to go from the poverty mindset to the truly risk management, risk averseness of having money. Because that's what you want to communicate to someone who might invest with you. Because remember, there's only 2 things that matter to you as a trader. Assets under management. Okay? And, well, I guess 3. Assets under management, rate of return, which is sort of the inverse of level of risk, over time. You see? Over time. So a good way to make money as a trader is be able to communicate to somebody with more money than you that you, like them, are risk averse. An amateur will go up and say, I make 100% a year. Pass. You just lost it. You're out. You just blew it. Hey, I'm a Forex trader. Oh, really? How much do you return every year? Oh, I do like 100%. Pass. You just lost the relationship. It's over. It's dead. Done. Okay? It's a message of somebody with no money talking to somebody with lots of money, and there's a disconnect. You see? One, right? It's like a Greek talking to a Turk. They don't understand each other, and they don't even like each other. Okay, it's just, right? So what you want to do is cross that bridge. If you're going to, for those that understand neuro-linguistic programming, right? You'll have to cross that bridge and communicate effectively with the other person. And that is risk averseness. And then the track record has to back that up. Okay, so your drawdowns are tiny. Your winning months are very consistent, right? And your returns and risk-adjusted performance, okay, tell a consistent story. What people want is the consistency. All right. So anyways, wow. Wow. Big money management day, huh? Let's get through some charts, huh? Okay. Orlando is making never made less than 10 to 20% a month. Okay, you just have too much risk. I'm glad that you're consistent, but you will need to lower the risk. Great. Cool. But congratulations. That's really nice. All right. Bitcoin, what does that show? There, well, slightly risk off. It's not a big mover right now compared to this drop, but we do on this time frame clearly have a 2155 down, but no lower low. But this fits the model that I want. It suggests dollar strength today. Oh, right on, guys. Yeah, I feel sometimes we get too off track, but these are big messages. I mean, they're important. Right? I mean, look, just yesterday, I spoke with someone with a lot of money. I don't need to say who and all that kind of stuff. But he said that he talked to, I think he said like 100, whatever that means, Forex traders. And he said they all give him outrageous numbers. Oh, we can do 40% a month. We can do 100%, a year, this kind of stuff. And he just laughed, like he kind of wiped his eyes a little bit, and he's like, it's all bullshit. It's all bullshit. I mean, I'm literally talking about yesterday. Someone that is screening dozens and dozens of foreign exchange traders, and he says it's all bullshit. So when we drop a number like 2% a month is the goal, he just immediately kind of sat back and like, oh, well, that seems reasonable. Just like a crack of a whip. So what I'm telling you is the truth, right? It's the truth. I'm telling you, it's reality. So you have to decide, do you want to be in the pile of Forex traders that sound like bullshit? Okay, you're doing 40% a month on, 50 grand, 20 grand, 10 grand. I don't know. But you're not going to get 40 million. You're not going to get 4 million. You probably, maybe you'll sucker in some, doctor, chiropractor that's give you a 40, 50, 60 grand, I guess. I don't know. But to any level of sophistication in finance, you just get thrown into the bullshit pile because it's just stupid. It just sounds stupid. Okay, so whatever. That's it. Okay, that's it. Okay, so let's get back to the trades, because you got to be able to earn the 1.5 to 2% a month with as little risk as possible. Okay, so what am I doing? Well, my trading was based on being short in that period, and I haven't done jack during this period. And I'm preparing to re-engage the markets in a period like this. Do you see? So what do I do during this period here? Nothing. Because I'm more interested in consistent returns with low risk. And because I plan things based on macroeconomics and central banking policies, which we call fundamental analysis, I have a bias to the downside, so I make money when it falls, and I either hedge or get the heck out of the way. Okay? Like I want to make a t-shirt that says buy, sell, or get the F out of the way. Well, I'm out of the way, bro. Okay? And I have the time to wait. Why do I have the time to wait? I'm only trying to make 1 or 2% a month. Okay? Cool. So I think down, and I said yesterday and on Sunday, I guess it was Sunday. On Sunday, I said, I think it's going to happen Tuesday. So I will wait. In fact, what I said on Sunday is that I'm at the right price, but it's not the right time. I think probably Tuesday. So, cool. I might have to do some work today. Okay? So what I preach in swing trading and day trading is that you get paid to do the research. You get paid to make the decisions. Are you a bull or a bear on the stock market? That's what you get paid for, not for trading. Trading's easy. You sell when it's a bearish market. Is it a bearish market now? No, but getting there. Sweet. Well, that's easy. But you have to decide way back, not now, but when we were here, and 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 when we were here, when we were here, when we were here, when we were here, and even when we were here, and here, and here, I was a bear. Most of the time, I don't have any trades, but I'm risk averse. Okay? But when the market turns bearish, and it might turn bearish today, and I expect it to, I'm going to make 1 to 2%. Okay? I did better than that last month. Okay? Well, I got lucky. It was a good month. It wasn't me. Okay? It wasn't me. The market produced a little bit more. That's okay, because that'll compensate me on sort of mediocre months. That's okay too. That ain't me. That's the market. I can't make the market move. Okay? Okay? I can't make the market move. I can't control the amount of money made. I can control the risk. Okay? So anyways, so if that falls today, and I hope it does, I think Bitcoin will fall. And I think gold will fall. So let me do bearish daily confluence. Take a look. Okay. Okay. I sold gold yesterday And it looks like I made money, so I'm going to move my stop to break even. What do you think of my trade? How did I do? Do you see what I did? As it was going up, I'm a bear. I'm a bear. I'm a bear. I'm a bear. Double top, lower low, lower high, lower low, lower high. Sell, 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 sell. Lower low, lower high. A lower low, a lower high. Ba 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 ba, ba doo be doo. Ba boo. Cool. Good. Good. Cool. Nice. Okay. Good. Nice. That's how you do it, right? So, let's see. If this was a $40,000 account, I need to make somewhere between $400 and $800 a month to get my 2%. Oh, good, I have 600. Good. I'm on par. It's going to be all right. It's going to be a decent month. Yeah, boy. Okay. But you know what? I remember I was short gold earlier, right? You have to remember this move here took me out of gold. Okay. And now I'm back in. Cool. Cool. Cool beans, man. Because I was a bear here and I'm a bear here. That shows my bias. So I've done fundamental analysis of macroeconomics. In particular, I've analyzed the probabilities, if you will, of the monetary policy of our central bank. And in periods of disinflation, I am selling gold. So I have a bias. And I use technical analysis to tell me when to get in and out, but not what to do. Shoot. If you use technical analysis to figure out what to do, what you've probably have found is it's very inconsistent. You know it works. You can see something here. You're like, I see these patterns. But for some reason you get inconsistent results. But well, by the time all this has happened, you're getting in, you're buying here and you're selling here, and you get to mediocrity or break even. And instead of using your charts to tell you how to, the right prices to execute your trades that you've already designed, what I call strategy. Okay. So anywho, that's how you would do that. Cool. So what else would happen if the stock market came down today, if gold came down today, if Bitcoin came down today? What else would happen? Okay. Okay. Aussie would move up, down. USD CAD would move up. Okay. This is interesting because this actually was a discussion of the apex. I would almost go neutral on this one until it's ready. That shows me euro strength. This would come down. And you can see, like, I covered this stuff a month ago and a week ago. Actually, that's 2 weeks ago. So this is just doing what it should be doing. Okay. Here's something we did in the swing trading group on Thursday, everybody. Thursday. down, 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 up, up, sell, down, 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 up, sell. And I don't know, what do you think? What are the probabilities that it does something like this? Well, I had drawn this out last week, right? Or something more like that. Because I don't know the future. I'm not trying to be so arrogant to say I know the future. But the thing is, dude, I'm a bear on this. Everybody knows I'm a bear on this. I cover it for months and months and months. Even when it's going up, I'm a bear. But the thing is, if you have clarity of intent, you're not going to miss selling in the moving averages like this. You're not going to miss this. You're just not, because you know exactly what to do. And, right, the leading indicator here is fundamentals. And then using the moving averages are great for knowing entries. But this other leading indicator says here to here. So it's not about being right, because you never know. In fact, I think it's so much more important to know when you're wrong. Of course you're right. Trading should be fairly straightforward. You should expect to win. When you place a trade, you should have done so much work that you know you're right. That's why you place the trade. You don't say things like, well, let's give this a shot. Oh, well, look, you know you're right. That's why you made the trade. It's much more informative when you're wrong. You're like, oh, look at that. And you get out for a small loss and it's no big deal. But that's why I say the alpha you create, the value that you create is in the research, knowing that even when this is going up, you're a bear. So that you don't miss the entries. Okay? That's all. Cool, right? I'm trying to inspire you to change some behavior. It takes time. I'm trying to inspire you to think and act and trade like a professional would, or like professionals do. Okay? So Kiwi down, Aussie down, pound down, gold down, Bitcoin down, S&P 500 down. If we go back to commodities, you might normally say oil down, but the issue with that is oil is doing more and more of its own thing. But is this down or up? I'll open a room, a live room, the same live room. Remember, when you click on the live room, it discerns whether you're supposed to be in there or not. What I'll do is I'll make it available to everybody. So there basically won't be a lock on that. Okay. Yeah, Lucas is right. It's just up. That's all it is. Now the question is, are you bullish or are you bearish? If you're bearish, you might have the right price, selling at 80, but it's the wrong time. Now, if you're bullish, this is the right time and the right price. Okay. Okay. Beautiful trading, huh? Beauty. Okay. Many standard deviations out of position on that, right? But when you get here, remember 81, I guess it's 82, but yeah, I guess it's 82. 82 is a big deal. I'll get rid of this just so you know. 82, you should be careful about. Okay, we know it's resistance, so it's a leading indicator. Well, Monday says, can you do a day trading? Well, the best one I can give you was the trade yesterday. So let me go back to gold. Maybe it'll, I guess I just have to minimize this. Okay, so how do I day trade? Well, I start with a long-term fundamental bias. Day trading doesn't change that at all. Okay. Then I zoom into here. You have to understand that this chart is set up to be bearish. This is a bearish chart. It says bearish selling zone. You see that Monday? So if you join FX Bootcamp, take the day trading course. It's only about 5.5 hours long. It says you should do this. Honestly, that's what it says. That's the 5 hours. How to do that. So that's what I did. I know I'm being facetious, but like, that's how you day trade. That's an easy day trade. Okay. It's an easy day trade. That's it. I mean, that's it. In fact, if I was going to be all judgy and stuff, I should have been, well, I know why I didn't do it there, but you could have done it there. I know on the higher time frame, it hadn't rolled over yet. So really this move here was a breach of longer term moving averages. And I didn't get, based on my rules of engagement, permission to engage until here. But that's just me being risk averse and conservative. Okay. So, but that's a day trade. Sweet. Now that's going to be hurting my exotic position typically. And we know that. Okay. So my gold is actually hedging my peso trade. And I could use this as an opportunity to get out, because you can mark it like this is now the issue, not the old issue down here. That's gone. So that's the new issue. So I could get out, or I can use my gold as a hedge. And remember, gold as a hedge, I'm earning positive swap. Okay. So it's a pretty decent hedge. I need to go out to a 4 hour on this. And right now, the 4 hour chart says stay short. I believe dollar is going to get strong, but what we've seen in the past on this position is that even when the dollar is strong, the peso has been stronger. So right now, I just got to use technical analysis, and most likely I'll be short for quite some time. Okay. Cool. But, yeah, am I concerned? Yeah. All right. somebody asked for nat gas. We can look at nat gas. This is our intra-market arbitrage play. Okay. And if you're a bull and a buyer of a dip, you have permission to engage in two places. Okay. One is here. But as a bull, this is more ideal, right? Now, on this swing trade, okay, you see an M3 to M1. We hit it on a Tuesday. Okay, that tells us we have a reasonable probability to get back to 2.8 this week. Okay, that's one thing. So what that suggests is that we go back to here by the end of the week. And then to look above that now, if you go from here to here, you're probably going to go to 3.3 actually. So I have to read through that technically now. The fundamentals behind this is the arbitrage that I set up in July. Okay. Well, I guess we got to go. It's getting pretty close to 10, and I think that testimony is 10 or 10:30. So, and I have to monkey around and set up the room and figure it all out. So I don't know if it'll take me 15 minutes or 30 minutes. So I got to go. I got to find where it is. I got to set up the meeting. But if you're a member of FX Bootcamp, my intent, if I can get all this rolling, is to set it up so every member of FX Bootcamp can join, even $88 a year members. So it'd be all those that have access to the video training courses, all members of swing trading, all members of day trading. We can all just hang. I got to find a mic. I got to find a bunch of other things. But hey, we can roll with it, right? You guys up for that? How many people are going to attend? It's going to be a long day because remember, there's a stop looking correct session at 2 today. Then there's a day trading meeting at 4 today. So now we're doing a 10 o'clock meeting that'll probably go to noon. Dude, that's 6 hours of FX Bootcamp. Byrne says, no, I didn't mean like that. But there is 3 different memberships, right? So I don't know how to say it. You're not less of a member, but I don't know how. There's video only. There's video and swing trading. Then there's video and swing trading and day trading. That's literally how it's set up. So it won't be in a swing trading meeting. It won't be in a day trading meeting. It'll be an all hands meeting. Okay? But it is a new system, so if I can't pull it off, and I apologize in advance. So, hey. Let me turn that off and let me flip over here to here. Peace on earth. May the pips be with you. May our profits be above average. Thanks for being part of the community. I'll see you when I see you.